Hi students, in my last class, we had discussed about various subsidiary books. And also, I mentioned incidentally, cash book is the primary subsidiary book. We are taking up today the cash book. These are the various kinds of cash book. Single column cash book, double column cash book, triple column cash book. Briefly, single column cash book means in your cash book, I repeat, in your cash book, you have only single column. In the sense, only cash column. You don't have either bank column or discount column. Just cash column. Then you may ask, suppose they have bank transaction, what they will do? Well, for that, they will separately open an account, ledger account. They will separately open a ledger account, bank account. Okay, bank account will be debited with various receipts and credited with various payments. Simple rule. Bank account, a personal account, it will be debited with various receipts and it will be credited by various payments. Debit the receiver, credit the giver. Okay. A ledger will, or in other words, if at all they are having, I repeat, if at all they are having a bank account also means they won't be routing it through the cash book. It will be separately maintained as a ledger. Cash book will be in a very simple way. Only cash column will be there to accommodate what is coming into the cash box and what is going out of the cash box. Just like that. As simple as like that. Whatever comes will be debited, whatever goes will be credited. That will deal, one or two sums will deal it later on. Okay. Then double column cash book means they won't be separately maintaining a bank account ledger. It will be within the cash book itself. It will have cash column as well as bank column. Okay, it will have bank cash column as well as bank column. All cash transactions and bank transactions are recorded through the cash book only. Then the last, third one, triple column cash book. Triple column cash book means apart from the cash column and bank column, you will be having the discount column also. Okay. Predominantly, questions are set from this third cash book, I mean triple column cash book. Anyway, a brief idea you have got now. Incidentally, I would like to mention that cash book is called a journal cum ledger. Why it is called a journal cum ledger? Why? What do you mean by ledger? The book outright the transaction at the very first entry, wherever you make, it is called journal. As such, any cash related or bank related transaction is at the outset ended in the cash book. In that way, we can call it as cash book. Then why it is called a ledger also? What are the functions of ledger? What are the things we expect from a ledger? It shall be balanced. We will be in a position, we should be in a position to balance it. We should get classified accounts. Yeah, well, classified account in respect of cash and bank you get from a double column cash book. Is it not? Yes. And also, at any moment, you can balance the cash book and know your balance on a particular date. Is it not? So it functions as a journal and also as a ledger. That's why cash book is called a journal cum ledger. You don't have to make a separate cash account or separate bank account, at least if you are maintaining a double column cash book. Okay. Now, another thing what you need to mainly know is that in a triple column cash book, you may have discount account also, I told you. Yes. But how will you manage in single column cash book and double column cash book. Just because you don't have a column discount in this single column cash book or double column cash book doesn't mean that in that organization discount is not either received or paid. It is there. You as an accountant have to respond to it. How will you account it? Well, that will be done through a full-fledged separate journal through journal proper. For example, let me assume that there is a transaction, cash account or bank account debtor 9,900, discount allowed account debtor 100 to Ramkumar 10,000. This is a journal agreement. What will be the question? What must have been the transaction? Can you say what must have been the transaction? Well, it is like that. We are either received cash or bank. Let me say check for 9,900 after allowing a discount of 100 rupees from Mr. Ramkumar. Okay. Now, this cash or bank will be suitably shown in the cash book, 9,900 rupees. Okay. If it is cash received means cash column will be debited with 9,900. If it is bank column, bank check received means bank column of the cash book will be debited with 9,900. Okay. That's all. To Ramkumar, how much? Obviously 9,900. And this discount 100 rupees will be separately shown through a journal proper. Discount allowed account debtor to Ramkumar 100 rupees. This is a compound journal entry. We have broken it into two, one through cash book and one through journal proper. Net effect will be this one. Okay. Similarly, there is a journal entry, a compound journal entry. Banerjee account debtor 5,000 to cash or bank 4950 to discount received 50. Here also tell me what must have been a transaction. I paid to Mr. Banerjee 5,000 rupees and he offered me 50 rupees discount, net payment being, I'm sorry, I settled Mr. Banerjee for 5,000 rupees, having paid him 4950 either cash or bank and discount received being 50 rupees. Okay. So, in the cash book, either in the cash or bank column, depending on whether he paid him cash or check, it will be suitably shown in the cash book with an amount of 4950. Which side it will be shown? The debit side or credit side? Banerjee to cash means cash by Banerjee. Naturally, it's a payment in the cash book credit side, 4950. And for this 50 rupees discount received, I'll be making yet another journal through my journal proper. Banerjee account debtor 52, discount received 50. If we combine this journal proper entry for 50 rupees and the cash book entry for 4,950, you will get this one. This thing you should keep it in mind. Okay. Well, students, after the introduction of GST, that is nothing but goods and service tax, which has consolidated and replaced the erstwhile VAT, value added tax, etc. A cash sales entry or a cash purchase entry in a cash book will be a compound journal entry, showing the sales basic amount supported with the entries for GST also. I repeat, supported with the entries for GST also. In the similar way, cash purchases also have to be accounted. In fact, there is an exclusive chapter for you regarding accounting for GST, which we will encounter comprehensively later on. Prior to the GST scenario, the cash sales amount as well as the cash purchase amount shown in a cash book was very much inclusive of the then sales tax or value added tax, that is called VAT, as the case may be. No separate entries were required in the cash book to indicate the tax part. I repeat, there is no separate entries were required in the cash book to indicate the tax part. Obviously, a single entry each only was required. I repeat, a single entry, a single journal entry each only was required for a cash sales or a cash purchase. Now the GST accounting necessitates. Now the GST accounting necessitates separate ledger maintenance in respect of output GST, that is for sales, as well as input GST for purchases. Let me explain. Please look at. Let's assume this is a cash sales involving GST and this is a cash purchase involving GST. We'll see one output CGST account and output SGST account for cash sales. What does it mean? It means your liability on account of having billed GST or charged or levied GST on your bills. So output GST denotes to cash sales. It's again, you'll see that it has been bifurcated into output CGST as well as output SGST. Okay. Output CGST means output central GST or central goods and service tax. Output SGST means output state GST. GST tax are bifurcated in respect of central government as well as state government. That's why this CGST as well as SGST comes. Here also, similarly, for a cash purchase, we see that input CGST as well as input SGST. What is all this input GST? It is related to the invoice you are received from your suppliers while making purchases. Okay. And you have practically paid this GST. So this is a GST expenditure you incurred. Then why it is kept separately like this? There is a provision in the GST Act that we can adjust, okay? We can adjust this input credit against your output liability. Or in other words, input GST is an asset that can be used to set off your output GST liability. Okay. This has to be learned in detail when we will be taking up the GST accounting in detail. We'll learn it. For the moment, to manage a cash book where these entries creep in means how we will manage only. I'm explaining this. Okay. What is this transaction all about? This or business has received 11,200 on a cash sales having a basic sales value of 10,000 and a total GST of 1,200 splitted into CGST 600 and SGST 600. That's why it has been accounted like that. Prior to this GST scenario, you would have simply shown cash account related to sales 11,200, or in other words, in the debit side of your cash book to sales 11,200. But the matter is over. Okay, but that is no longer there now. It has to be splitted and categorically shown, right? Similarly, for cash purchase, this is a cash purchase. For that, they paid 5,600 total. Basic purchase value is 5,000. Or GST splitted into CGST as well as SGST 300 each. That is input CGST 300, input SGST 300. This way you account it. How you do account it? Prior to the GST scenario, a simple journal entry. Purchase account letter 5,600 to cash 5,600. That is no longer possible. So these two entries may be new to you. That's why I am giving emphasis to this one. Okay. Now let us take up the practical questions. I repeat, the practical questions from the author D.K. Goel. Okay, a very standard textbook, single column cash book. We are dealing the practical questions from the author D.K. Goel. Well, students, there are 5 number of questions, single column cash book by Sri D.K. Goel in his textbook. Let us work out one by one. At the outset, let me tell you, you kindly manage the questions and keep it alongside so that when I explain to you or when I work out it will be convenient for you to grasp it. Else, what I will do is that I have typed out all the 5 questions that I will display first. You pause it and take down, keep it ready. Okay, thank you. Well, these are the questions. Book reference D.K. Goel, 17th edition, published in the year 2019, page number 11.51, practical question 1. There is no meaning in explaining to whatever he has worked out. I should work out and convince you the answer. He has given the answer as 16,300. I hope you have managed this question. Next one. Question number 2, the answer has been given as 36,000. Question number 3, the answer has been given as 1,29,000. Question number 4, the answer has been given, cash balance as rupees 60,500. Question number 5, the answer has been given as cash balance rupees 47,200. Now my job is to explain to each and every entry and arrive at this balance. So let's start. Let's go back to question number 1. In the question number 1, what the gentleman has told is that commenced the business with cash 25,000. Think of the journal entry, cash to capital. Yes, that's all, cash to capital, 25,000. See, those simple and silly entries, I will do it fast. Wherever emphasis is required for special points, it will be done, right? Thereafter, bought goods for cash 10,000. What's the journal entry? Purchase to cash or cash by purchase. Rule of posting. X to Y is nothing but Y by X. Why it cannot be written to purchase here? And it will be cash to purchase. I don't want that entry. I want purchase to cash. That's why cash by purchase. Or in a simple way, thumb rule, remember it. All receipts in the cash box comes in the debit side. All payments out of cash box comes in the credit side. But I suggest you learn in a professional way. Think of the journal entry and learn it. Fine. Next. Paid carriage to cash or cash by carriage 200. Sold goods for cash to sales 6,000. Received from Ram 1,000. So entry will be cash to Ram 1,000. Paid to Shivakumar to cash or cash by Shivakumar 2,600. Cash to sales. Never write cash to cash sales. Cash to sales. There may be cash sales or credit sales. Credit sales, of course, doesn't get qualified in a cash book. Sales only, right? Cash to sales. 8,400. Purchase furniture for cash for office 5,000. Buy furniture. Why not purchase? It has been told as purchased. Well, he has not been told as a furniture dealer. Okay, this furniture he has purchased, used as an asset. So it will be booked in the asset's name itself. I want to have separate control over this asset. Okay, it has to be applied in the business for so many years, not to be resold. Okay, whenever you buy an asset name itself, it has to be booked. Next, paid for advertisement. By advertisement expenses. Advertisement expenses to cash or cash by advertisement expenses. Okay. Purchase to goods from Mahesh on credit. On credit means Baba, I did not pay him anything. You give me the goods, will be paid later on. At this moment, there is no cash movement. It's a cash transaction, does not come here. So absolutely a credit dealing. So, or in other words, if I generalize, I find that purchase to Mahesh, neither debit nor the credit has got a cash account. Hence, it does not get qualified here. I ignored it. Fine. Paid to Mahesh. By Mahesh, I need not always say paid to Mahesh means Mahesh to cash or cash by Mahesh. By this time, you must have understood it. Okay. Paid wages by wages. Received for commission. Cash to commission received account. Withdrew for personal use. Any removal from the office for personal purpose will be debited to an account called drawings. In the first, my video I had told about all this capital drawings and other things. Keep on. Those of you who are not yet got stabilized with the basics, keep on watching the first videos or videos prior to this one. Okay, fine. So withdrew for personal use. So drawings to cash or cash by drawings. Salary, paid salary, salary to cash or cash by salary. Simple way you can write all receipts into the cash box in the debit side, all payments from the cash box in the credit side. Or still simpler, whatever comes to the cash box in the debit side, whatever goes out of cash box in the credit side. But that is for a second check. Always learn it through the journal entry, because I just want you all to become professionals in accounts. So don't just mug up, learn through journal entries. So if we do all this, you'll find the 16,300 is the answer that which the author also has given. Let me move to the next question. The question reference page number 11.51, question number 2. Here says balance of cash in hand. Why I have not written here to capital? No, it is yesterday's balance brought down. Okay, it's running business. So it's to balance brought down. I already told you that an opening balance will be indicated by balance brought down, and a closing balance will be indicated by balance carried on. The previous sum, the closing balance is 16,300. I had shown by balance carried on. Of course, in the next day, it will be brought down as 16,300 as the opening balance. Similarly, in this sum, there was a closing balance yesterday that has been brought down today as the opening balance 50,000. That's why the balance brought down. Okay. Next, purchase goods for cash by purchase 22,000. Purchased goods. Now you'll be confused. Purchased goods, is it on credit purchase or cash purchase? If someone's name is not mentioned, or they are not categorically told you it is a credit purchase, it's obviously a cash purchase. So by purchase 15,000. What is the difference between cash purchase and credit purchase? Cash purchase means across the table the cash moved. Credit purchase means take the goods. Your account I keep with me. You'll be settled later on. So it's a credit dealing. So it doesn't get qualified in the cash flow, right? Fine. Purchase goods from Gobi. Categorically, it has been told. Categorically, it has been told from Mr. Gobi. A credit transaction, it doesn't get qualified here, right? Purchase goods from Gobi for cash. Of course, very specific cash. Absolutely comes to cash book. So, what will be the entry by purchase? How much amount? 10,000. Okay. Thereafter, sold goods. Sold goods. Unless mentioned otherwise, it's a credit or someone's name is attached to it. It's obviously a cash sale. So to sales. Okay. How much is it? 20,000. Fine. Sold goods to Vishwakarma. Okay. Credit transaction. Just ignore. Why ignore? What would have been the journal entry? Vishwakarma to sales. Neither debit or credit is a cash. So obviously I will ignore it. Okay. Fine. Sold goods to Raghunathan for cash. Cash. If someone's name mentioned and for cash means that name is of no relevance. It is for a cash transaction. So what will be the entry? Cash to sales. Okay. Someone's name is mentioned. Just because someone's name is mentioned, don't jump into and conclude it is a credit transaction. Further, they are told that it is for cash. So it's a cash transaction. His name is irrelevant there. Fine. Received cash to commission, received commission, right? To commission received 5,000, right? Total the heavier side 93,000. Put the total here. There is a balance of 36,000 that has been written against balance carried on. This process I already explained while explaining to the ledger. Under any circumstance, balance carried on in respect of a cash column can come in this side. It means minus cash balance. That's impossible. Or in other words, you can't take out of the cash box more than what you have put in the cash box or whatever is available in the cash box. That's why it will never come like that. In spite of your doing the best way it comes means the question setter has made a mistake, which of course let us roll out it. Okay. So always the debit side of the cash column you can safely add first. It has to be essentially the heavier side. Put it across, find the difference, and set balance it by balance carried on, by balance carried on. Okay. Now next, third one. Come on, what is the third one? Obviously, he has given the answer as 1,29,700. Okay. We've been commenced business with cash to capital. It's a test story starting today morning only. Cash introduced into the business by way of capital, cash to capital. Opened a bank account and deposited. That means debit the receiver, credit the giver. Bank to cash or cash by bank. Okay. If it is a double column cash book means the scenario, there would have been one more entry that I will discuss you when we take up double column cash book. Here it is. Bank has received, debit the receiver and credit what goes out. Or in simple way, cash moved out of the cash box. It comes in the credit side. So just remember that. But always line it through journal entry, bank to cash or cash by bank. Fine. Purchase goods for cash. By purchase 30,000. Purchase goods. Purchase goods, of course. No one's name is attached. It is obviously I will infer it as a what? Cash purchase. So by purchase 50,000. Purchase good from Suryakant 40,000. Someone's name is specifically mentioned that they are not further stated, it's just cash. Obviously, it is a credit transaction and I'm ignoring since it doesn't get qualified in the cash book. Fine. Paid to Suryakant. Debit the receiver, credit the giver. By Suryakant, 38,800. The entry was Suryakant to cash or cash by Suryakant. All receipts in the cash box this side, all payments from the cash box in this side, or in other words, whatever comes to cash box in this side, whatever goes out of the cash box this side, right? Discount received 1,200. I have already explained. With keeping these things in the mind only, using the whiteboard, all rare items I explained. I told you that discount received will not get qualified in a single column cash book or a double column cash book. Rather, we will have it then through a journal proper. There we will make an entry. What entry will make it? Suryakant to discount received 1,200. Well, it doesn't have a place here. That's enough. Okay. Paid wages in cash. How much? 22,500 by wages. Paid to casual labor. That's also another way of informing that wages has been made. Casual labor is all comes under wages. No, they are not, only permanent employees are paid salary. Okay, fine. Sold goods to Devraj for cash. For cash. Devraj to be ignored here. It's a cash dealing. So to sales. Okay. To sales. How much? Sold goods to Devraj for cash. How much? To sales 80,000. Fine. Paid electricity bill. By electricity charges. Don't write electricity bill because each transaction has got a decent account head. So by electricity charges 12,000. Withdrew cash from bank. What's the journal entry? Think of it. Debit what comes? Cash. Credit the giver. Cash to bank. So cash to bank 40,000. Or in some other ways. Especially this is the simple most thing you will be learning as far as cash book is concerned. At least after having made the entire transaction, have a look at each and everything, keeping in mind anything to the cash box, debit side, anything gone out from the cash box, credit side. Okay. I will be teaching everything in a systematic way, in a professional way, using the journal entry only. For you beginners, to satisfy yourself, of course, you can adapt this short technique, whatever you like. Okay. 40,000, that's over. Received for cash sales, 5,000. So what's the entry? Cash to sales, 5,000. That's all. Paid for miscellaneous expenses, by miscellaneous expenses, 5,000. Total the heavier side, 3,25,000. Put the total across here. See, students, I have made a mistake. It is a typing mistake only. Excuse me, because as of now I don't have somebody to assist me. So I had to do everything. So please be there with me. It comes 3,25,000. Okay. And the balance will be 1,29,700. You can verify all this at your end, right? By balance carried on, I brought down the next date. It was on February 28th, closing balance. On the next working day, March 1st, I brought down the balance. Okay. And other two has agreed this balance. So question number 4. Cash in hand 25,000. Brought down cash. To balance brought down 25,000. Cash sales within brackets CGST 6%, SGST 6%. Yes, GST bearing sales. That's why I made you to master all these things using the blackboard and using the whiteboard at the very beginning. Fine. Basic value of the sales has been written to sales, and the respective tax has been written to output CGST account 2,400 to output SGST account 2,400. 2,400 is nothing but 6% of 40,000. Once again, I'm telling you that output GSTs, maybe output is GST or maybe output is GST. These are all liabilities only, because on your sales you are levied the GST, which you are supposed to remit to the GST department. Okay. Whereas in case of a purchase means you can garner such GSTs, arrive consolidate at the month end, and set off that one against this liability. For that purpose only, input GST, maybe input CGST or input SGST, etc. are separately accounted. Fine. Next one, received from X on behalf of Y 4,000. See, it looks so funny, no? On behalf of Y, that Y only matters here. X is a middleman. I just ignore him. So what will be the entry? Received from Y rupees 4,000. So cash to Y account 4,000. Paid to Zompal 4,900. Discount received 100. By Zompal 4,900. Discount received, I need not again and again tell, it does not get qualified in the cash book. How will you deal, however, this discount received? In my journal proper, I will make a journal entry saying that Zompal account debtor 100 to discount received. Okay, that is a different story, not required for this sum, right? Received from Vijay Kumar 7,800 and discount allowed 200. Again, discount allowed summarily ignore. Physical movement of money collected 7,800. Amount to Vijay Kumar 7,800. Bought goods for cash is also CGST 6%, SGST 6%. That means GST bearing purchase. I have already told you how to handle it. So the entry will be basic amount by purchase 20,000. Okay. And by input CGST account, by input SGST account 6% of 20,000. Okay. So by purchase basic value and by input CGST account, right? When it is purchase, it's input. Input means it is an asset. We are taking the input credits against various purchases, because you are paid to this party this much also. You pay to them how much? 22,400. This 2,400 that you can keep aside and adjust against your month-end output liability. That's why it is all separately kept. Separate ledgers are maintained for all these four. What are these four? Output CGST1 ledger, output SGST1 ledger, input CGST1 ledger, input SGST1 ledger. Because there are very set procedures, rules, everything is there to set off. You can't do our municipal budget cannot be set off. Okay, that we learn when we take up that GST accounting treatment. We learn it. For the moment, you just remember that purchase related GSTs are accommodated under input. It will be input CGST and input SGST. And sales related, it will be under output GST. That will be output CGST and output SGST. Okay. Fine. Then next, paid cartage. There also GST. When if I mention purchase, it's not necessarily that only purchase time the GST will be there. Any expenditure where you have incurred, any expenditure where you have incurred GST also. You have suffered GST, you pay to somebody GST, is it not? You can garnish the GST and keep it towards your input credit to be adjusted for the setting off. Okay, that also will be part of your input credit. Hence, basically accounted by cartage 1000 and by thereafter, as far as the GST part is concerned, same entry. Input GST, input SGST. 60 rupees, of course, 6%. That's all. Remitted to Dharamveer. Remitted means sent. That's all. Or paid. So by Dharamveer, 1880. Ignore, by this time you are very strong enough to ignore the discount in a single column cash book. For that matter, the double column cash book to be taken up later on. And thereafter, what is that next one? After Dharamveer, okay. Received MO from Mr. Mohan. MO means money order. This is just to confuse you. Money order means postman came and gave you the money. Cash you receive, that's all. Forget about MO and other things. When you have received cash from somebody, what is the entry? Cash to Mohan. So that's what I told. To Mohan, 500. That's all. Borrowed from Mahabir. You were told that okay, money received, so cash to Mahabir. But mind, borrowed means it's a loan you have practically taken. So, okay, suffix it with Mahabir's loan account. So, otherwise, just Mahabir means as if he owes you, he has settled. It's not like that. You have taken a loan from him. So, Mahabir's loan account. Borrowing leads to a loan, right? Mahabir's loan account. Received from Bhushan, 3,900. To Bhushan 3,900. I'm strong enough now to ignore the discount, so I'm not accounting it. Total the heavier side 93,500. Put the same total here 93,500. And the difference comes 60,500 by balance carried on. Next day itself, I'm bringing it down. That's a formality. To balance brought down the same total, and our respectable author has agreed to that. Answer as 60,500. Fine. Let us now take up the next question, that is the last one. Fifth question. Cash in hand. Obviously, running business, yesterday's cash. To balance brought down. It is not that just introduced cash to as capital. In that case, you would have written to capital. No, it is the cash in hand means excess yesterday's cash brought down. So to cash balance brought down 1,20,000. Bought machinery for 60,000 and paid carriage. Keep it in mind, students. Why I have written buy machinery 60 plus 2,000, 62,000 is that. The fundamental rule, you please keep it in mind. If an asset is purchased, all incidental expenses till the asset is installed in your office will be a part and parcel of the original cost. Okay, asset purchase for 60,000 and the 2,000 rupees I have to incur to ensure the asset is installed or to reach my office. So practically purchase asset for 62,000. Don't bifurcate, don't put it under carriage and everything. That you would have done had it been normal purchase. Carriage would have been booked separately. Here it will be part and parcel of the asset. So a consolidated amount of 62,000 is put under buy machinery account. Buy goods for 25,000. This is to confirm what the point what I told. Buy goods means about good means goods to be traded, naturally under purchase, by purchase 25,000. And this carriage, of course, so much such carriage expenses takes place very frequently. So we have a separate account. We keep it under by coolie and carriage. This carriage is related to the purchase of those goods to be traded, not in respect of the carriage expenditure in respect of the machinery or any asset for that matter. That will be just absorbed by the asset itself. Okay. Next one, bought goods from Ravidas. Tell me, bought goods from Ravidas. How much? 15,000. Will it get qualified in this cash? No, it will not. Why? Someone's name is mentioned and they are not told, emphasize it the word and paid cash or something like that. So it is very much a cash credit transaction. If I generalize, it looks like that. Purchase to Ravidas. Neither the debit nor the credit having cash as an entry. So it will not get qualified. Or in other ways, credit transaction does not get qualified in a cash book. Fine. Cash received from sale of motorbike, 5,000. Sale means just don't jump and put into sale. When asset is sold, the asset's name itself it is operated. Okay. So to motorbike. When I buy motorbike, it was buy motorbike. When I sell motorbike, to motorbike. Simple like that. Thereafter, sold goods for cash less 5% cash discount. So we should work out how much was the cash discount? 1,000. So 20,000 minus 1,000. I got only 9,000. Sold goods for cash less 5% cash discount. So 19,000 is the physical movement of cash. That much cash only moved to my cash box. That I am debiting. Okay, cash to sales 19,000. Okay. Sold goods 40,000. What do you do? They are not mentioned anybody's name, nor they have told it is a credit sale. So obviously it's a cash sale. Sold goods means sold goods for cash. If someone's name is not mentioned or they are not categorically mentioned to you, sold goods on credit means if you are dealing with cash books, it is sold goods for cash implied. So to sales 40,000. Paid to Ravidas on account 10,000. By Ravidas 10,000. You may be a little confused. What is this on account? On account means as of now I have not taken the goods from Baba. You just keep this money. Tomorrow morning or next week I am coming to take the good, purchase something from me. Against that I am giving you. Okay. I will just keep your name in my ledger. Okay. I'm not going to book. I right now as purchase. I just keep your name. You will be debited, and it will be squared up once the purchase follows. Right. So debit the receiver, credit what person. Ravidas to cash or cash by Ravidas, or in simple way, what is that? Moved out of the cash box by Ravidas. That's all. Thereafter, what is the next one after 20? Discount received also they were told incidentally. But if you know, by this time we are very thorough. Discount received doesn't get qualified in a cash book. I am ignoring it. Okay. Oh, I think I little got confused here. Paid to Ravidas on account. Thereafter it comes bought goods from Suresh for cash less 4% cash discount. Okay. That means 4% of 30,000. It is nothing but how much it comes? 1,200. So physical receipt of cash is only 28,800. That I am booking it by purchase 28,800. And the discount part of 1,200. So many times I have discussed it is to be ignored for the cash book purpose. Right. And paid to Ravidas 4,500. By Ravidas 4,800. Debit the receiver, credit what goes out. Or it's simple way, cash moved out of the cash box, it comes in the credit side. Right. Discount received, of course. Just to be summarily ignored. Cash collected from Ashok, a debtor. Why they cash collected from somebody? What will be entry? Cash to Ashok. Yes, there the matter ends. When why they are told as a debtor is not, it is not that I had taken a loan from him or something like that. He owed me money, which I collected. Or in other words, his name, I had already opened an account, okay, when I sold the goods. So as such, he owes me. That's why his name is now settled to this extent. So cash to assure. Cash account, debtor to assure. Purchase postage stamps. Don't write buy postage stamps. That's decent account head for settings. That is called by postage stamps account. Okay. So buy postage stamps account 500. Salary paid to accountant. Paid to accountant or anybody, salary paid means we are worried about only that particular ledger account salary. So buy salary 15,000. Okay. Total behavior side. Put the same total across, and the balance comes 47,200. I have written against, balance carried out. That's all. So what is the special items we have learned? It is special asset. Okay, when an asset is purchased, the incidental expenditure, maybe coolie, cottage, or installation charges, everything will be added to the original cost, and it will be booked against the asset account. Okay, that expenditure will not be bifurcated. Just add the expenditure and enhance the value of the asset and book it. Well, students, that's all for today. I hope I have convinced you all the 5 questions, each and every entries. Save the poor video quality, if at all it is there, or audio quality. But concept, the content, I have made it very thorough, I hope so. Okay. As usual, please practice, practice, practice. Practice means lot of confidence we get. And of course, accountancy is a very nice subject. Okay. Take more and more interest. Okay. These days, accountants have got plenty of opportunities. Basics, whatever I get. I'm a person having 41 years of experience behind me, having worked in 3 different organizations. Okay, in a practical way, I tell you, my intention is to see that students take interest in the subject. Okay, explain to them in a practical way. Okay, thank you. See you soon.